Good afternoon, guys. So, this one's another subscriber-only stream, right? Now, I might put some of this information out in another stream in the next week or so for the more kind of wider audience, the general public. But for now, this is something I wanted to show you guys. One, to do with some of the indicators, but two, just kind of the core concepts, right? Because I know this doesn't have to be necessarily about Bitcoin, but in essence, Bitcoin's kind of a good example to show you this, right? Now, in one of the last streams I talked about, I might have mentioned a little bit about trading, automation, etc., etc. Right? This is what these five indicators that I've got here, these ICT concepts, Lux Algo, etc. And this is nothing to do with what I'm going to tell you about today. So this is why these are there. Right? So ignore all of them. The only two things I want to talk about today is the footprint and the CVD. Right. So the two indicators kind of are one in the same. They kind of work almost hand in hand together. Um, Peter Hammer actually wrote these indicator scripts, and this was on the back of us having a conversation about footprint charts in general. I used to use a form of footprint charts a long time ago, and I guess the reality is it's just how deep you would like to go into the chart itself. Right now, if you go into the education section and scroll up to the very top, I think it's in the interest in lesson subsection or the education tab, you'll see I talked about how to find volume without using volume tools and profiles. I guess this is where, for me, I stopped using footprint charts when you realize the message was already kind of written out in a candlestick chart, right? So a lot of the time, less is more. I think when you're a newer trader, you tend to seem to want to think that more is more, right? It's more details, more data, more stories, more news. The longer you do this, the more you realize that the opposite is completely true. The more data you have, the more confusing it can become, right? So what I want to do is just show you almost a breakdown as to how you can use these things to your advantage, right? And then how you can almost strip them away altogether. So in the last couple of posts I've done for TradingView and the last couple of streams, I've talked about things like obviously the automation. So that's a completely different series. In terms of the where we are and what we're doing, right? These are the kinds of things that I've covered recently. If you haven't seen these posts, right, come and have a look. I recently watched this film, Dumb Money, and it was a really big eye opener as to the mentality and the mindset, right? So I've covered a lot of these things that you've already seen as subscribers, right? And I go back to what I said, back last year, so September 2022, as to why I wouldn't want to see this kind of move, right? So the levels there, look, right? And, again, you guys are already going to know this level here, right, is just part of that auction area. What do you think is inside that auction area? Well, the clue is clearly in the swing before. We've dropped down, we've consolidated with a little grind up, and we've dropped down heavily. There's an awful lot of selling volume sat within this range. The reason that I didn't want us to come back up to this area without having any kind of cluster formation down the bottom is without a big enough accumulation move down low, we're likely to see the drop from up high, right? Because there's not enough fuel in the tank, right? So this is the kind of the premise of this video today. So putting all this together, right, I just want to show you kind of how and how you can kind of come to these conclusions for yourself. The last post I did was about this, what I call max pain, right? Now, max pain, in essence, is what is caused by composite man, right? It's caused by people's stupidity, in essence. So for me, coupling the two things together makes a lot of sense, right? It's the dumb money, max pain. Now, the general idea of max pain, right, is if you imagine being in this trade, let's just say we're in this trade from here, the max pain is clearly below this level of liquidity. Right? So we've taken max pain, right? We've taken out the stop losses. We've had a nice little rally. We've kept our profits, saying things like Lambos and diamond hands. We then get stopped out. Now, the maximum pain for the people that have just been stopped out is the fact that shit, I was wrong. I've lost all my account. Then they see the price rally and rally and rally away from them. So the main issue that you have there is that this causes kind of the second degree of maximum pain. It's almost an embarrassment rather than just the pain, right? Because they weren't in this move. They were clearly stopped out at this point after thinking, right, I'm in early, great. Now, obviously, at this particular point, right, we've rallied up. Then we start this grind. Right? Now, this grind, this move, is designed again to catch people out in every which way, shape, and form, right? It's, am I going up to come down to drop again? Am I going down to come up to rally again? Right? This is a horrible move. This isn't what you'd class as an impulsive move. Right? We then had, obviously, another pain break, followed by a rally. Now, at this point, people are saying, wow, we've just taken out a new high. Right? We're off to the moon, only to see this drop come thick and fast. Max pain as the overall trade is obviously back to the liquidity. Now, this for me is where Elliott Wave, Wyckoff, these types of concepts, these kinds of theories, these are the things, right, that if you put together, you can come up with almost the ideal scenario. Right? So going back to what I talked about with dumb money, right? This was obviously the whole GameStop corporation setup. Now, a lot of people will say, you look at GameStop and this was, the dumb money winning. Guys, this is once in a, probably in a lifetime in terms of an event, right? The only trouble being is 9 out of 10 dumb money traders actually didn't profit from this move. The reason they didn't profit from this move, right, is that they got greedy. I watched that film and I was sitting there most of the way through, just absolutely gobsmacked. There was this nurse, right, that she'd put in $1,000 or $2,000 right at the start of the film. She was there saying to a colleague, "Oh well, my salary is 62,000." She's put in $1,000, $2,000, $4,000, whatever it was a tiny amount, right? She'd put in this kind of couple of $1,000s into this Robinhood account. At one stage throughout the film, she was up 512,000. Now, where's the mindset in terms of you've just made 100x return on an investment, bare minimum? Why not cash out 300,000, 400,000? Keep $100,000 in there for the long run, right? At that point, money in your pocket, money banked. The reality is, dumb money don't think like this, right? Dumb money only wants the one big trade that changes their lifestyle. When you're starting with $1,000 or a $10,000 account, right? This is nigh on impossible. This is a lottery ticket type win. If you've got something that you've caught from the bottom and you've had a rally like this, just take your money and be grateful. I remember back in 2019, a good friend of mine reached out and he said, "Have you heard about this Elrod?" I think was the stock or the crypto. And I said, "No, I haven't heard of this." He said, "Well, I'm getting involved and I'm doing this and I'm doing that." So I ended up putting in a couple of $1,000 and kind of almost forgot about it. A couple of months later, didn't think about it, didn't think about it. A couple of months go by again, didn't think about it. I was actually doing some education with someone one on one, and they said to me, "Hey, do you have any crypto?" And I said, "Well, yes and no. Got a few XRP from a while back. I've got a few Bitcoin that I'm still sitting on. Oh, I actually got this one Elrod." And we looked at the chart together. Well, I'd bought in at something like $7, right? The price after, 18 months or whatever it was, had actually skyrocketed to 240. I couldn't hit the sell button fast enough. Right? It was a colossal trade. But in the grand scheme of things, pure luck from my high, no skill involved whatsoever, none, right? Minor skill. The reality is, it was cashing out because there was profit that I could bank. Right? And this is what trading's about. You don't want to see these moves, rally, rally, rally. Oh, let's hold. Price drops down, rally, rally, rally. Let's hold. Price drops down, right? Max pain. So, putting all of these things together, right? The reason I wanted to put this as kind of an educational, members only kind of stream was when you put all the pieces together and you understand what it is you're looking for. This particular indicator right at the bottom, the CBD, and I'll show this on a real chart in a second, right? The CBD basically shows one of two things. You've got basically the volume, right? And then the second thing is ultimately momentum. When you talk CVD on footprint charts, what it actually does is it's the buys minus the sells, or the sells minus the buys, depending. So what it's doing is it's basically a sum of that particular candle, right? So if you go on a line that we're going to say, per vertical line, right? What you'd have is the CVD is this positive or is this negative per that one candle you look at, right? That's all a CVD does, right? So in essence, what we were seeing back then, and I've taken this back to bar replay mode, right? Before I go into that, I'm just going to show you what, if you don't understand what a footprint chart is, this is what it is. So I tend to use bars rather than candles, right? This is just personal preference. They're pretty much the same. What you have is, if we take a candle, right? On a green candle, you're going to have the open. You're going to have a move on up. You're going to have potentially, obviously, the high and a low, right? And you can see this mapped out like that, right? So that's a candle. In a bar, we're going to have the open and have the move up, right? We're then going to have, obviously, perhaps the movers come back down, and we're going to have the close. So there's absolutely zero difference in terms of this there to there, and there to there, there to there, and there to there, right? There's no difference whatsoever. When we look inside a footprint chart, what a footprint is doing is exactly the same thing. The only thing that it's doing is giving us these little numbers, right? Now, these little numbers, they're not quite as simple or as straightforward as you see it. You're not looking at this. Oh, change that color. You're not looking at this. What you're actually looking at, right, is this. Now, don't tell me why, right? Or don't even ask me why. No idea, right? It's just the way that it is. So in essence, what you have is the buys and the sells, right? Now, what you're looking for are certain areas that actually create the differences, right? Now, taking all this data and all this data, right, you can read into this what you like. You can read into this, 1,000 different things, right? The reality is all we're looking for is something that says, hey, something's not quite right. So in essence, what we're looking for is either a very small number followed by a very big number, right? And a big, big gap or a big, big difference between two or three things, right? So for me, if I'm looking at this, I'm saying, well, there's a couple of things there. We've got 688, right? I'll change the color again in a second. We've got a 688 married to a 1-1. So that's almost double, right? So clearly, there was an awful lot of selling pressure up at the top. And this is the first thing. Now, the second thing is, obviously, I'm going to scroll through. I'm just going to glance at this and say, well, what else can I see? Well, halfway through, we've got a 458 followed by a 1432, right? Which means, again, there's a lot of pressure in and around this level. Right? So what I'm going to look at is, I'm going to say, well, okay, we've got some big, big numbers, right? And we've got big numbers, for example, these two here, right? These levels here, these levels here. What I can do almost at a glance is to say, well, the point of control, looking at this, is much greater to the upside, right? So there's my low point level, right? These numbers are very small. These numbers are quite large, right? So just with a guess, right? My point of control within inside the candle, if I was to draw, your volume profile, let's just put a volume profile on here just to show the example. If I was to stick a volume profile on here, right? Just as this is suggesting that the point of control is down low, in a candle like this with this high movement there, my point of control is very likely to be somewhere in here, right? It's not going to be down there. So for me, the only data that I need to extract is not looking at the numbers in detail and go, oh, well, I think this and I think that, and I want to be precise in terms of a level. I'm just looking at what's happening. Well, clearly, first things first, the Bulls have actually won this little battle, this mini battle. Right? This is a green candle, so we've actually closed higher than we started. So there's your first clue. Second of all, we've got all the momentum in the top half of the candle. So even if the price rallies on up in the next, right, if we open here and we rally on up, the chances are we could come back to the point of control of the previous candle to give us momentum to go again. Right? Now, if we take this candle and assume this is an hourly candle, we zoom on down to say a 15-minute candle. What we're going to see inside the 15-minute candle, right, is something that maybe looks a little bit like this, right, in terms of the moves up, right, covering that 1 hour candle or whatever it might be. Right? What you might find is that we might see this fair value gap, the imbalance. We might see a little bit of an order block forming, right? We might see just an auction area of any type forming. This is the clue that these numbers are doing what they should be doing, which means on a smaller time frame, when the price comes back to your fair value gap, or the price comes back to the master pattern, price comes back to the auction area, whatever terminology you're going to use, right? It's then going to do one of two things. Is it likely that we've now exhausted to the high side? We come down, we play around and create a new pattern and drop. Or we haven't exhausted to the downside, we're coming back to gain more liquidity to go again. Right? Either which way, these clues are kind of written even in a standard candle, right, without the footprint. So what we done, myself and Peter, when we were talking about making this particular indicator, right, it was how can we use this type of indicator and how can we take that kind of level of understanding and simplify it. This is where obviously the momentum grows. This is where obviously we can take this into account. Right? Now, before I touch on to this itself, last thing I want to show you. Now, obviously this might be too fast for some of you guys, so watch this a couple of times over. Right? And any questions, honestly, just post, post in the technical questions, post in crypto, whatever channel you need to post in. Just post and ask. Right? Don't sit there thinking, no, I don't understand. Just post and ask, right? Or you're never going to understand. The reality is, every little move, just change the color again, I don't know why it keeps going back to white. So every little move, every candle has one of these things inside, right? This is kind of the point of control. This is almost like a session volume profile tool. Right? So as we see momentum growing, price rising, what you start to see is you start seeing these clusters come together where point of control almost kind of contracts and pulls, that it's kind of creating this range to each other. Right? We get another one near the top, look. Now obviously the first point that we're aiming to target is going to be this one here. Right? What you might find then is the price will rally back and then it'll drop again because the momentum is building. Okay, so what you're looking for in essence is the same concepts, but in terms of the candles and the bars, rather than having to use a footprint, right? The footprint is just extra detail, right? So what I wanted to do was I wanted to show this as an example. Let me get rid of all these little drawings. I wanted to show this as an example on the Bitcoin chart in terms of what these footprint levels are. So if I zoom right in on this level, this isn't an exact level per one candle. This is almost like where the footprint starts, right? This is where at the moment we've had some really good buy-in pressure. Now, if you can't see this, I'll put this on. I know Paul will probably struggle with this, right? I'm going to put that on. I'm going to put this as green. Now, the reason that it's green is we've obviously had some nice buy-in momentum. We've got some nice momentum growing here in the CBD, which means there's a nice area of interest for the price to come back to. Now the next thing is we can clearly look and say, well, max pain could give us this level or this level. These are the two areas of liquidity. Right? So I'm going to change these to say red, to the max levels of pain. Right, now, as the price obviously rallies away, right, we can say to ourselves, well, we've had a nice little rally, right? We've gone up from where we were down here, we kind of carrying on up, right? And I'm going to play the footprint through a little bit more. So we've got the footprint level down low. We've got maximum pain areas, right? So there's going to be clearly an area of interest down here, and there's going to be a big area of interest down there. Right? So what we want to do is we want to look at now, when the price starts to come back to these levels, right, what tends to happen is one of two things. We're going to come back to these levels, right? We just stop the replay. Or, get rid of this, get rid of this. We're going to look at these levels and say, well, there's an awful lot of movement that have now gone on. Right? We've created now more max pain levels, right? So I can add max pain, but now what we've also got is additional footprints being created, right? So if we looked inside from a weekly to say a 4-hourly, we might see, put this as say blue. We're going to say this is where the new footprint, so this is now the old footprint, this is where the new footprint starts. We've created a change of character, right, which meant that technically we've just wiped out gains from that first move, but not altogether because we didn't come below it. Right? So we've got another footprint, right? So these footprints now become the kind of key levels for future use, right? I'll go into in a second why and where. What you'll find for later is how you can identify whether they're bullish or bearish, right? So what I want to do is I'm ignoring this one at the moment, right? Because we haven't had any kind of change of character to bring us back down to this one. Right? And I'll come back into that then. So what I'll do is I'll put this as something like yellow for now. Okay. So what I'm going to do then is I'm going to go in this and I'm going to say, well, okay, what I want now is a change of character. We still haven't had a change of character, right? This is still going up and still going up. So at the moment, all these numbers seem very irrelevant in the grand scheme of things. We've had another one here, so I'm going to change this back to yellow. Okay. What I'm looking at now is momentum is still building. So at the moment, there's no real reason or logic for a pullback. Nothing at all. Right? We've just spiked up now and had another massive spike. Oh, look, we must be, we must be finishing up now, and we're not going any higher. Right? We carry on. All of a sudden, we start to create a slightly different change in the momentum. If you zoom right in, what you can see here, right, is a couple of footprints very close together. Remember what I just showed you at the top, that last image that I showed you, right? The price comes up, it creates a couple of little movements, goes up, creates a couple of little movements, drops down, maybe back up and retest. Right? That's the kind of shape and the pattern. What do you think we're seeing in here? Right? We've got now a couple of footprint areas in there and there. Right? And you see what happens? So what we've done now is we've created these kind of footprint concepts in line format. Right? Now, the momentum has started to shift. The green is not quite turned red, right? But it's about to. I'm going to slow this down a little bit. Right? And what we're looking at now is the next couple of areas in terms of the footprint. Well, look at these footprints now starting to become apparent. So what are we likely to see? We want to see these footprints either being grabbed in terms of liquidity or acting as a form of support. Right? So again, we'll play this through just a little bit longer. Right. Look at the interaction with these footprint levels. Now, everything I've just said, everything I've just covered, right? These footprints, right, are they're the point of control in a smaller level. So if I was to draw a point of control, or if I was to draw, from down low up high, right, and I get a point of control. A point of control, look, right, is the maximum one down very low, right? This is part of the reason for Bitcoin especially. I don't really look at anything below 2018, January 2018, end of 2017. It's just not interesting for me because the data is not real, right? It's kind of like this wasn't an institutionalized tool just yet. But what you'll find is that these footprints, look, right? These footprints are the high volume nodes. You see the high volume, right? You see the high volume, right? You see the high volume, right? These are the high volume nodes in an actual profile. Right? So these charts, these footprints that you see in these levels, are basically telling you the same thing as having your volume profile tool on there, right? And after a while, you get used to seeing this without needing to see this, right? And I'll explain, and I'll show you that in a second. Which, when you get to that point, right, you know kind of what's about to happen next and why. And this is a big factor, because what we're now seeing is we're seeing now price dropping, but so is momentum. So if momentum's dropping, what are we looking for? Well, we're looking for, technically, upside liquidity. So where's our upside liquidity likely to come from? Well, if our upside liquidity, we've just had the move in the zone, right? We've dropped through the zone, back, retested the zone, dropped down, right? There's basically our line break, retest, and drop. What we're now seeing is obviously this cluster. So we're seeing basically a seller's climax followed by an AR, right? So what we're looking for now is, where do you think our next level is coming from? Our next level is likely to be in this kind of zone. Right? Now, obviously, if this was already an institutionalized instrument, right, I'd be looking for this to come deeper. The reason I'd be looking for deeper is that we would likely see max pain, right? We'd see a max pain in and around this region, and then we'd go, right? Because at this particular point, you know, the price would have come from much lower further on. The only reason that it isn't is 2018 for me was the start of the real institutionalized kind of asset transition. And obviously knowing, you know, in terms of where we are with Bitcoin, the reality is, you know, these levels are almost too low for that institutional move as a whole, right? If we get, you know, the sweep of that, right, then obviously you probably would have hit 100K already, right? Because the liquidity would have been low. However, it was still a play thing until 2018, which means very unlikely to tag those levels, you know, during this move, right? Obviously, guys, you know, going back in hindsight here, because this is, you know, this has already happened. So what I'm saying is, if you look at these levels and we can work these levels, right, what you're looking for is, why are we buying liquidity down low? Why are we looking for buy side liquidity down low, right? Where down low is that obviously likely to want to happen, right? So these levels now for me are quite key, right? If obviously we can tag liquidity, this is going to give us more momentum to the upside faster, right? If we don't tag this liquidity, it stays open. If it stays open, right, we're going to want to come back and grab it before we properly go, right? So let me now put this on pause. I'll put this up faster speed, and I'll put this in. Right? So what we're looking for now is tap into liquidity, and then obviously from there, look, we can start to build momentum to the upside. Right? Now, obviously, what have we got now? From these levels here, we can drag this box out. I can drag this box out. And I can do away with these lower levels for now, because the only thing that I'm interested in, right, is the current play. I'm even going to get rid of these, and this big profile. Okay, so the main things that I'm interested in at the moment, right, is we've got basically bottom end liquidity from this swing over here. We've had the upside liquidity that's taken us down, right? So it means there's going to be an awful lot of selling, right? There's going to be a lot of selling pressure in and around this level to start with. Right? Then obviously we can start, hopefully, to start seeing the rally. We break out of that liquidity down low. Now look at what happens to momentum. We cross here. We start building up momentum to the upside. Right? Look how these little zones are being used. These levels are playing themselves out. Right? Now, what are we doing there? This particular point, we are reaccumulating with support at a past footprint level. Right? Now, that level over here, look, was obviously used on the way down, but it was actually a gap on the way up. Right? So you see how these things start to come together. Right? Now, obviously, as we start seeing these moves, right, we start seeing these moves play themselves out. You see how strong these lines will be, right? You can see where the liquidity is. What we're looking for now, right, is a move up against the liquidity using the liquidity from down low. Right? There we go again. Look, there's our next dip into that liquidity. Right? So obviously at this particular point, we've now got more tapped into from down low. The attractive part of up high is this. I'm going to move this across again, right? So at this particular point, right, once we start seeing this type of move, we can start almost moving our liquidity levels up, because now we've got a new change in the character, especially once we've broken this level. Just put that on. It's going to be the real change of character. So put this as say purple. Right? Change of character then is that we've had this momentum shift. Broke a change of character. Now we're going to start using this as that liquidity. The only issue that we have overall is as we've moved up and through it, we're now going to be wanting to do the inverse. Now the top side liquidity is going to start acting as that support, yeah? Does that make sense? So what we now have is this region here now becomes support for future use. I'm less interested in these moves down here because we've actually used a lot of these moves. So it's only this one here at 11 and this one here at 13. Right? So there's going to be another little zone that we could tap in there. Right? And all that is a little gap based on these couple of candles. Right? So for me right now, my areas of interest to the upside, right, is the fact that we've now broken the change of character at the purple. We're likely to want to come back and test this, or this. Right? Now, this was the first pullback. The next pullback, hopefully a little bit deeper. Oh, look, we didn't have it. So now what starts to happen is we form these next couple of levels, next couple of lines, right? We can start creating these, and, you get used to these, right, in terms of what have we done? What are we doing? What are we seeing? So at the moment, this whole region, I'll get rid of these boxes, right? This whole region now is the biggest area that's technically untapped. And that's the zone, that's the area of interest. So for me, we start to move up. Now again, I said about auction areas, right? This is where you get, the general idea from. We get these auction areas. Right? There's a full zone there because you've got these two candles in between. So you can see how these things start to fit together, right? We now kind of do again, we've got momentum building, volume obviously built up, dropped down, but built again, right? So what we want to see now is, what are we likely to do next? Well, we first come up and create, I think this might even be that first all-time high. Just, no, not quite. So we build up, right? And we then see, I think that was the all-time high, the first all-time high. So we see this move, right? What we then have, look, is two zones sitting in there. The issue that we have there is there's a lot more value to the downside, which means a lot more sellers. And this one we're going to say a lot more buyers. Right? We've got a couple of key areas of interest. Play this forward. You can see what we then go and do. We come down to the zone. Look at these levels, right? These levels are not coincidence, yeah? These are not, guessed. These levels are easily mapped out, right? And this is what the whole point of this indicator was about. So now what we've got the volume basically depleting to the downside. So, the kind of the move is coming to an end, right? We've come down and tagged the key area, but we still have liquidity down low. Right? We've got upside liquidity up here, right? But obviously this for me, although it's upside, it's actually negative in terms of the delta, right? Because there was like a lack of interest at this area. So then we come on down, we start moving on up, we come straight into this zone, right? And you see what we do, we play around this little zone, and I'm on a weekly time frame, right? So within that week, within this zone, we break through it, right? And this for me is where the fake up, right? This is where people like Plan B were saying, oh, 135k next month. This is where it was beyond obvious, right? This is where it was, well, I can't even explain how simple this was. What I talk about in terms of max pain, right? This is max pain. The reason that this is max pain is you've got guys that shorted this thinking that, this is the end of Bitcoin. You've got your doom and gloomers in terms of this is going to zero, right? You've also got your buyers who were buying on the back of people like Plan B saying, oh, we're off to the moon. So at this particular stage, what you'd likely want to see happen, and this is what, you really, really want to see happen, is this candle, this high, you're going to have stop losses. So I'll just put this in notes. You're going to have stop losses from obviously shorts. and we're going to see new long entries over the high. So what you'd expect to happen is as we break that, you'd want to see a significant rally to give us the confidence that that's what's about to happen. What we do, look, is we don't grab any more downside liquidity. And this is where, for me, the whole point of, hey, we're not ready yet, right? We didn't grab this. We haven't grabbed that. There's an awful lot of liquidity sitting in these pockets, right? As we then fast forward, we break that high. We broke the high and did what? Rejected. Right? That rejection from that high is the first clue. We're not likely to want to go. The second piece of evidence is this liquidity down low. The third piece is, as the price rallied up, the momentum was dropping. Right? So this is just a classic divergence. So when you put all of these things together, right, how obvious are these moves to come out and see? Right? So I'll take this off just to make it easy to see. Take this off, take this off. We then start, get rid of this one, get rid of this, I'll get rid of that, right? We then start dropping down, right? And we all know the story from here, right? We all start dropping down. What do? We play around at the first level of liquidity, right? So for me, this level of liquidity is now kind of come and gone, right? We've kind of had our fun. We've gone through it. We've come back and tested it. We've dropped. We've broke through. We've come back and tested it, right? So for me, it's kind of a semi-interesting level. Probably will be a semi-interesting level in the future. So in essence, right, we can put a semi-interesting level. Let's mark that up as orange. Right? We've obviously got an interesting level in green there. Right? There was liquidity obviously under max pain, which means it'll fire some stop losses. Right? So as we see this level then getting hit, we want to see momentum build. Right? We get into that level, boom. Right? Now at this particular point, much like the high, right, has it broken cleared? No. Right? So it's not really a lot of momentum, not yet. What we then want to see is obviously the grind. Now when I wrote that post about, do you know trend line breaks? Why is this key? Well, the answer is there. We broke down, but we didn't clear it with conviction. Didn't clear with conviction. What do you expect? There we go. Tap of liquidity. And then we can start moving on down. All right. So these things, like I said, these are so obvious when you start to understand what's causing the move in the first place. If you know that that liquidity now has been used again, right? Now for me, this has gone from less interesting to even less interesting, right? So I'm going to change that from orange to grey, right? Because it's still there, still kind of semi-interesting, right? We've now created another level up slightly higher, this one here, right? And again, these ones for me now are kind of less interesting for now, right? Because clearly we're more attracted to the downside. We've tagged the downside. Now obviously what we could be looking for is where do we go from there? Well, straight down, look to the next level of liquidity into our little zone. Right? But we haven't actually broke yet that zone. So at the moment we're dancing on top of that zone. Obviously that slightly higher, but we haven't, I would say personally, we haven't, I don't like this. Right? So at that particular point, the momentum was building. We now tap the zone, which means I've got this painted as green from the move before. We've had a lot of buy-in points and pressure at this particular stage in the past. Where are my key areas or levels of interest? I got this one here, which is obviously from before. So these two levels there, look. So there's my first area of interest. That's the first. I would do that as a box instead, maybe. My first area of interest is that one there. And this is why, for me personally, when I said that I thought we were accumulating, I really wanted this to be the case. That what we ended up doing was we'd go from here up to there, back down and grab some more, and then go. So my idea, my logic, my thinking would have been an optimal trade, right? An optimal move up, down, go. Right? That was what I was looking for. Instead, what we actually had, look, was as we moved away from this area, we come up, and we kind of didn't come back for anything else. There was no liquidity grab to that downside, right? This would have been the perfect time to go down, not up, right? So obviously, what we can start looking at then is the areas of interest. We clearly didn't have what we wanted out of this one. This move obviously starts happening there, not there. So this would have been, like I said, optimal. This would have been the one that would have confirmed for me a bullish run. That would have been ideal. Instead, the price went. We didn't grab any extra liquidity. Nothing at all. You see, even this purple, didn't grab it, didn't want to grab it. Right? So the issue is now, we've gone up kind of sideways. We come up to that first footprint and you see what it does, look. We play along the second footprint. And this is where we are today. So the reality is we've got a slight area of liquidity to the upside, which could easily be the U10, right? And this is probably the 47, 48K mark that, I know a few people have already said about. That could easily be a U10, right? At the moment, we're playing at this level of liquidity. For me, the main liquidity is still in play there. However, we've got a couple of other boxes down low. We've clearly got this one down here as the first one, right? And then we've got a bigger one, obviously, I would say in between these two there. So if I was to take all of these away and look at what we've got, what we're doing, the main things for me, and I'm going to ignore this one, so obviously I don't think we go back to it ever again. I think the main things for me right now are these kind of couple of key areas there. So the story is still pretty much the same. We've actually gone and gone up, right? And I've just walked through, the whole life cycle here, right? If you look at what we've done with these arrows, we've lost momentum as the price rallied. What did we then see? We saw the build in momentum as the price dropped. Right? We've seen exactly the same thing on a bigger scale. We've seen from the low, the price rise. In momentum terms, we've seen the complete opposite. Right? So for me, the fact that we've got this massive level of liquidity, all selling liquidity, max pain is obviously up and above this level. Say max pain is we're going to have new entries long on the back of, oh, we've broken a new high. And the reality is we've got a second one there, which is 52. Right? So the range for me, 48, 52, is probably still a bit stupid, but the reality is it does cause max pain. So if we grind up to this level, right, my concern is we go beyond this level, right? And then this is where my post about the unlikely scenario don't want to play out, is that we go above this level and we come to these levels of max pain. Because at this particular point, what you then have is you have a bigger zone, which is from the bottom of there to the top of that, right? Which is ultimately all out and out red liquidity. Right? Because at that particular point, that isn't a 6-month fix. That's a 2 to 3 year move coming back down to these kinds of regions. Imagine we see 65K again without coming down to these kinds of, even if I said this one was just halfway, 22. Right? If I said 22 being an ideal kind of level, I'd love to see 22 with a dip into, 17, 18K just as a one candle spike. If we move on up to these levels, right, we're going to have a long, long, long bear market. Right? So again, the optimal move is slightly grind up and down. Right? Another option could be down back to the 30, back up to the 48, back down to these kind of regions. Mhm. So they're the couple of different scenarios, and I just wanted to share this with you guys in the sense of why I'm saying for me, nothing's changed. Nothing's really changed. There's not enough fuel in the tank for us to see, 100K anytime soon. Right? The reality is this kind of hype, this pipe, this move that we've seen up right now, it's more likely that all we've seen is an A move down. Here's my little arrows. Is this A move down, right? Followed by a B move up, even if we get to this kind of level, which means we then very likely to see a C move down, back from this level, back down into at least this range, right? And I probably say that range being conservative. So the way that I'm seeing this right now is more likely an A, followed by a B, and then back down for a C, right? Now, again, how these things kind of come back together, you can run fib extensions. Let me go to this one as well. You can run fib extensions and so on, like retracement levels and so on and so on. We can do a couple of things in terms of the clustering. We can go in and say from this price low up to the high, we come back these levels here, right? This is, all the way back. This is a big, big move. 786 to an 86, right? That's kind of one of my preferred pullbacks on a move, something like this. This is the 50 to the 60, right? So again, the 618. This is, this is a common theme. So there's two very plausible candidates there for a move back. What I can then look at is the fib extension levels from the top down to the low and back up. Let's just say we do get to the low there. Well, the 618, guys, look, it's 50% market. Right? So for me, that there is again just another massive candidate that we don't have to go deep. We just need to be long. Right? And we need to be in a position where we're not going to get negative Bitcoin. I think the reality is, seeing that kind of move play out, right, is going to be massive pain for a lot of people. Because right now, people again are back to taking mortgages and loans on buying Bitcoin. If this comes down and it takes, another 18 months to come down here, a lot of people are going to be in a lot of pain, right? So, I know this one's again another longer video, guys, and you might not watch this all the way through until the end, but if you do and you have watched this all the way, then that's kind of the point, is you're here to learn. And I think the biggest problem for me with any kind of permeable kind of nonsense right now is you can't throw the halving and the BlackRock ETF, at every argument in terms of why the price is going to go up and go up infinitely. The reality is I'm trying to give you some rationale, some logic as to what we've done and why. Why are we doing what we're doing, and what we're likely to keep doing when we're doing what we're doing. Okay, so in the grand scheme of things, this is just me. This is just my opinion. This is just me looking at what I'm seeing in the market. For me right now, the obvious plays are there. I don't like the fact that we've gone from 32 to 45. Um, that for me just kind of sums up this grey area is potentially the higher side liquidity. And if it is, it's all red, so at that particular point, it's just a question of how far do we go? How far do we go up overall? If I look at some of these moves, I mean, I looked at some of these as again a clustering type technique. If I look at these levels down low and I come up, we've got the first swing to the first low as the main one. We've tagged there, you got a 2618, which is literally just above. So if we got up there, that's one option. The next option obviously is the next high, and if we can't work out what's inside this type of 5 wave move, we've tagged a 272, which is obviously a massive level in corrective moves. So, that's the other thing. If we come up one more and say, can I find a 5 sitting in there somewhere? It's again a similar kind of thing. We've tagged that zone. This is why I've got these two zones as yellow. These are the kind of golden zones in terms of corrective moves. So for me, we kind of in the zone in any which way, shape, or form, and therefore, if we run up a little bit more, it's purely on hype. If we get into the liquidity, it's red. Momentum, it's down. Stochastic, monthly, overbought. It's nothing right now. We're saying, hey, we're off to the moon, and that's just how I'm seeing it. So anyway, let me know any questions. I hope you enjoyed this one. Sorry for blabbering for so long, but I really hope you guys enjoyed it, and I'll see you on the next stream. Cheers for watching all.